What's cracking, folks? Just getting out a couple shares here real quick, and we are going to dive in. And boy, do we have some stuff to talk about today, I'll tell you what. Just bear with a moment, please. Can't wait for this. Hope y'all are doing well today. Just one more quick share out here, and we will be diving right in.
You are watching Chaos Crypto News, the crypto news that you need to know.
What's cracking, everybody? KhaosDubz here with the Chaos Crypto News, the crypto news you need to know. Today we're going to talk a little bit about some of the crazy scams and hacks going on in the markets and general market news and XRP and the whole lot. So we've got some exciting stuff to go over here. I want to start off by saying, obviously, this is not financial advice. Always do your own research and don't trust, but always verify. To start off with a little bit of Quantzilla news here. So as you can see, Quantzilla is on the screen here. If you head over to Dex Screener, you can find us, and you hit that rocket. It will help us out a lot. Quantzilla has achieved another milestone for raiders. So paid to raid weekly payout chart is live in our announcement section on our Telegram. Raiders on the leaderboard can request payouts in Qzilla on either XRPL, which is our native chain, or BNB, because we're wrapped. And you can trade the BNB wrapped Quantzilla on PancakeSwap now too. If you haven't jumped in yet, head to www.quantzilla.online, join our Telegram, and get paid to raid. Also, verify our coin addresses there because we do have people trying to impersonate us. In other news, Quantzilla devs, Greenspade, and myself will be hosting our first Community X Spaces later tonight at 7 Mountain Time, 6 Pacific, on my X page at Dubz Chaos. So be sure to follow both my page and Quantzilla Coin, and jump into our chat later. You can share your opinions and get to know us personally. Also, check out my YouTube for crypto games content, some scam investigations, XDC and Cardano deep dives, interviews, more news segments, and a whole lot more. You can find me at KhaosDubz. Don't miss out on this revolution. Check out the Telegram for Quantzilla. There's updated information, opportunities, and an awesome community. If you're on YouTube, you can find the links in the description below. Make sure to like, share, subscribe, and follow. That being said, let's jump into some news here today. So, crypto scams are set for the biggest year ever due to AI, says Chainalysis. Crypto scams could have the biggest year yet in 2025, fueled by the growth of AI and professional scamming support services as the fraud industry gets more sophisticated. Generative AI is making scams more scalable and affordable for bad actors to conduct, enabling high fidelity, low cost, and highly scalable fraud that exploits human vulnerabilities. It facilitates the creation of synthetic and fake identities, allowing fraudsters to impersonate real users and bypass identity verification controls. Crypto scam revenue has reached around $9.9 billion in 2024, led by pig butchering scams. It expects the figure to likely increase to over $12 billion as it identifies more addresses associated with fraud and scams. And in the last episode, I talked a little bit about some of the fraud and scams and attacks that are going on. We're going to tie into that because there's been more information coming out. It's becoming kind of scary. So a hacker has been offered, I should say, a 10% bounty after stealing over $9 million in Ethereum from a lending platform. A decentralized money lending protocol built on Ethereum, Scaling Solutions Starknet, is taking action to recover the funds stolen from its platform. ZK Lend issued a bounty offer to the hacker who siphoned more than $9 million worth of assets in a security breach this week. The protocol tells the exploiter to return at least 90% of the stolen funds and, in return, keep the remaining 10% as a reward. So they say, we understand that you are responsible for today's attack on ZK Lend. You may keep 10% of the funds as a white hat bounty and send back the remaining 90%, or about 3,300 Ethereum to be exact, to this Ethereum address, and they list their address here. ZK Lend says it will release the bad actor from any liability related to the attack once it receives the transfer. It also warns of the potential consequences if the amount is not returned by the set deadline on Friday. We are working with security firms and law enforcement at this stage. If we do not hear back from you by essentially Friday, we will proceed with the next steps to track and prosecute you. The hacker's wallet currently holds over $7 million in crypto assets. Crazy times, folks, crazy times. Now, this is kind of related to what I was talking about in the last episode a couple days ago there. The old $5 wrench attack. It's kind of one of the attack vectors that, no matter how secure you are, can always be a problem. So 6 men have kidnapped a Chicago family, forcing $15 million in crypto transfers, says this report. 6 men have reportedly been charged over allegedly kidnapping a family of 3 and a nanny in Chicago before forcing them to transfer $15 million worth of crypto. Cited a recently unsealed FBI affidavit, the kidnappers knocked on the family's townhouse door, pretending that they accidentally damaged the garage door, and then forced their way inside with guns. The kidnappers allegedly forced the family into a van before taking them to an Airbnb about an hour away for one night and then to another house the next day. The kidnappers allegedly demanded ransom payments in Bitcoin, Ether, and other cryptos, threatening to kill them otherwise, as the victims claimed. The victims were allegedly held for a total of 5 days, during which one of the victims was able to call his father on a Chinese messaging app, WeChat, that they had been kidnapped. Well, $15 million worth of cryptos were claimed to have been transferred. U.S. officials have only accounted for about $6 million worth thus far. The 6 suspects were charged on December 13th. Only one of them, 34-year-old Zihuan Wei, was arrested as he attempted to re-enter the U.S. from Mexico on January 17th. The other 5 men include all these guys here, and they're believed to have fled to China after Wei's arrest. So, not awesome at all. In the last episode, I was talking about how one of the co-founders of the Ledger hardware wallet and I guess another guy there related to that project were kidnapped, and they had a similar thing happen. And then the newest one, aside from this, I guess, which was the most recent that happened in Spain, I believe, Buddy had to jump from a huge balcony 30 feet up, and he broke both his ankles to try to escape. Those guys were indeed arrested, though, so it's just kind of crazy. Always watch who you trust. Always watch who you're talking to and telling stuff to. And I mean, if random people invite you to go out to their apartment after, you're at a bar and you meet them or whatever, and you don't know them, it's always better to maybe just say no, because in that case, that's what happened. And yeah, it turned into a pretty bad situation. So apparently the X account of World Liberty Financial co-founder was hacked and promoted a fake Barron Trump meme coin project. A hacker promoted the meme coin project to essentially the public, saying that Trump will confirm the news soon. However, World Liberty Financial confirmed that Witkoff's account had been compromised and urged users not to engage. Donald Trump's daughter Ivanka was also the subject of a fake meme coin project in late January. Not much else to talk about here. My highlighting went away, but it's just a pretty short article as it is, so that sums it up pretty well there. Like I always say, don't trust, verify. Now, a Ponzi scheme mastermind has been sentenced to 45,376 years in prison over a $131 million farm bank scam. So the creator of a mobile gaming app that was later deemed to be a Ponzi scheme has been sentenced to many, many lifetimes in prison. The game was inspired by Farmville and allowed users to invest in virtual livestock in order to supposedly earn a return on real-world agricultural assets in Turkey. After scamming over 350,000 domestic Turkish investors and another 150,000 foreigners, authorities seized the company's assets and arrested several executives while Aiden fled to Uruguay, where he was on the run for years. Aiden was eventually spotted in Uruguay driving a Ferrari, triggering a manhunt before he ultimately agreed to turn himself in to the Turkish embassy in Sao Paulo, Brazil. It is estimated that Farmbank wrongfully profited at least 1.1 billion Turkish lira, or about 131 million US dollars. Insane. It's absolutely insane. This sort of regulation is definitely going to help a little bit at least, but I mean, scammers are always going to be there in any regard. I mean, you have, a lot of scammers calling from India, for example, and, if you watch any Scam Baiters, Kit Boga or Pleasant Green, for example, stuff like that, you'll see how it's a constant problem, regardless of if crypto's involved or not. I mean, there's tractor scams going on. There's all kinds of, it's just absolutely insane. You always got to verify, don't just trust. Trust is kind of a dirty word. Now, some good news for those of you in the USA. Pro-crypto Robert F. Kennedy Jr. confirmed as U.S. Secretary of Health. Now, I'm not exactly sure how that all ties in to benefiting crypto overall, but I think it's more just what he's involved in. So RFK Jr. is now the U.S. Secretary of Health after a tight 52-48 Senate vote with no Democrats supporting him. No shit, eh? Well, he's a hardcore Bitcoin advocate and has millions invested in Bitcoin and wants the U.S. to build a national Bitcoin reserve. During his 2024 campaign, he promised to put the U.S. budget on-chain and transfer government-held Bitcoin to the Fed. And I think this is going to be one of the most important things regarding crypto regulation and like the way everything's going is we're going to be able to see where the taxes are going. And I think that's really going to add a lot of clarity to people and a lot more trust in paying the taxes rather than, money printing, which has been happening all through COVID, of course. And then the funds are just going to essentially black projects or, for example, the U.S. military, which has a massive, massive budget, but not all of it can be necessarily accounted for. And I heard a thing the other day saying something along the lines of, well, the last time that we tried to, check into the Pentagon and where the funds are, or essentially give them an audit or whatever, 9/11 happened. So I'm not really sure how true all that is, but nonetheless, it's an interesting point to think about. And, you never really know. The people in control are always kind of a step ahead. And again, the people who aren't in control, the citizens, we're kind of at the mercy of them. So definitely something to watch out for. I think it's bullish overall, though, for the crypto sector because clarity is important. Now, a little bit of AI news here today. So OpenAI CEO Sam Altman says GPT-5 is coming in a matter of months. I mean, it's exponential growth, and it's absolutely astonishing how fast and how much, I don't know if percentage gains is the best way to say, but how much smarter the next iterations are getting in such a short time. It's really wild, and it's pretty cool. If you haven't played with any of these large language models, I highly suggest checking them out. Same with the, AI art programs. There's AI video programs out there. It's just so much out there. It's super cool. Check out Comfy UI if you're a little bit more technology advanced with this kind of stuff. It doesn't have any of the limits. You can download whatever models you want, and it's not going to block you from making certain stuff, but it does have quite the learning curve. It'll definitely take you a little bit to figure out, but it's super cool what you can create. So in an updated roadmap posted to X on February 12th, Altman said the artificial intelligence firm will first release GPT 4.5, called Orion internally, as OpenAI's last non-chain of thought model. So after that, a top goal for us is to unify O-series models and GPT-series models by creating systems that can use all of our tools, know when to think for a long time or not, and generally be useful for a very wide range of tasks. In both ChatGPT and our API, we will release GPT-5 as a system that integrates a lot of our technology, including O3, and they will no longer be shipping O3 as a standalone model. Now, if you're not familiar with ChatGPT O3, it came out quite shortly after O1, and it's impressive at its efficacy, its thinking, and its logic and reasoning. If you haven't played with it, it's definitely something to check out. It's super smart at it on the back end. It's actually amazed me several times of what it can come up with. It does sometimes take a little bit longer to do the reasoning, but it's worth it in the end. Now, OpenAI's O3 is the firm's reasoning model, which attempts to fact-check itself to avoid getting facts wrong or generating false information. It released an O3 Mini on January 31st as an AI model designed to enhance reasoning capabilities, particularly in tasks involving math, coding, and scientific analysis. The AI race has been heating up with the launch of rivals DeepSeek, which functions similarly to GPT, and whose launch spooked US stock and crypto markets. Microsoft and OpenAI are reportedly probing if data from ChatGPT's API was improperly obtained by a group linked to DeepSeek. Now, I heard something about this related to, I believe it was a Chinese national that was working for Google, if I'm not mistaken, and he moved back to China, and I believe he's being investigated or charged, if I'm not mistaken, in relation to possibly stealing this information. So, it's kind of a shit show with all this stuff going on, and you never really know who to trust. Again, trust is kind of a dirty word, but interesting nonetheless. Maybe this DeepSeek was made so cheaply and so efficiently because it was essentially just copycatting and then adding in a few extra bits and pieces here and there. I guess time will tell. A little side note here related to one of the trading platforms that I do like. If you haven't heard of it, I think Blowfin is a pretty solid platform, and I think you should check it out. If you head over to my YouTube channel at KhaosDubz, there's a link in the description for Blowfin. It's an affiliate link. Both get a little kickback there, I believe, if you do sign up using my link. But Blowfin's having a trading competition, which they do regularly, for a chance to win a piece of the $5.6 million prize pool. This is a team competition, so join the Bit Consensus team to maximize your reward opportunities. Competition officially runs until March 6th. If you're interested, they got leverage up to 50x in Canada, and I've heard it does go higher outside of Canada. There's no KYC, there's good withdrawal limits, and there's pretty good volume and liquidity. There's also a really wide array of tokens that are relatively hard to find on other exchanges that require a little bit more verification. Talk a little bit about Robert Kiyosaki here. Rich Dad, Poor Dad author issues crucial market crash warning, but here's the bullish twist. So Robert Kiyosaki issued a statement to the global financial community on the X social media platform, warning them that he expects a market crash to arrive soon. He pointed out that the jobs market is shrinking not only in the US, but around the world. The new US president, according to him, intends to cut down 65,000 jobs. Kiyosaki tweeted that oil companies are laying off thousands of workers because the economy is contracting. Car-producing giants such as Nissan in Japan and Volkswagen in Germany are also firing thousands of workers. Kiyosaki warns, prepare for a market crash, possible depression, while government officials keep promising a soft landing. Let me know what you think in the comments, if it's going to be a soft landing, if we're going into a depression, or if this is maybe just FUD. But Kiyosaki says it's not going to be a soft landing. Stop dreaming. He urges the community, time to get back to real life. Roughly a week ago, Kiyosaki excited the community with a tweet sharing the reason for his recent Bitcoin purchase. He also bought some more physical gold. He believes that owning gold and Bitcoin is smarter and safer than saving dollars. Kiyosaki started calling US dollars fake in 2020 when the pandemic started and the US government began issuing survival checks. In 2020 alone, more than 6 trillion were printed, and since then, the government has switched on the printer many times. One of the goals was to bail out large US banks in 2023. Kiyosaki also recently stated that should Bitcoin crash, he would only celebrate it and buy the dip. Same goes for gold and silver, according to his tweets. Kiyosaki treats Bitcoin, silver, and gold as the only assets that are safe and profitable to hold in the long term, unlike cash, stocks, or bonds. I mean, a lot of people in the crypto sphere already kind of know that it's a better safe haven, but nothing is guaranteed. Now, the Binance lawsuit has paused. A former SEC official says the Ripple lawsuit could be fully withdrawn. Not a whole lot to talk about here. I'm sure a lot of you already kind of have heard some of this. But recently, both the SEC and Binance requested a Washington, D.C. federal judge to pause the ongoing enforcement action for 2 months. This pause is seen as part of the agency's effort to develop a clearer framework through its newly formed crypto task force. As part of this process, the SEC may reconsider its entire approach to crypto regulation, potentially influencing the ongoing fake, if I may add, Ripple case. Definitely something to look forward to. Interesting developments are happening, and I mean, we have crypto-friendly people in positions of power now. So I think we're on to a better future regarding this kind of stuff. Regulation by enforcement and the whole Gary Gensler thing has just been a sham, essentially. So I'm excited to see that he's gone, and we're getting some actually reasonable heads sitting at the table here and ready to do business. BNB market cap surpasses Solana amid CZ's active promotion. So over the past week, BNB's prices increased by 13%, elevating its market cap to over $104 billion, thereby flipping Solana. The BNB chain's performance, processing 68.3 million transactions in the past 30 days, further highlights the traction. With this, it has effectively become the leading EVM chain by monthly transactions. The BNB chain ecosystem is witnessing a resurgence of meme coins, particularly with the emergence of the 4.meme platform, and data on Dune shows that this platform has facilitated the creation of over 12,000 meme tokens in a single day. Despite sector competition from Solana's Pump.Fun and Tron's Sun Pump, the turnout suggests a growing interest in meme-based cryptos with the BNB chain community. Nevertheless, actions such as malicious attacks remain a consistent threat, interrupting platform performance. Meanwhile, BNB also posted the strongest gains among the top 30 cryptos, surging 12% to around 711 US. It stood out as one of the few tokens to show positive price movement while the broader market struggled. The analyst also suggested a potential shift of investor interest from Solana to the BNB chain due to perceived better efficiency. Interesting stuff there. BNB's been around for a while, and Solana, I know it has as well, but a lot of people get rugged on Solana. We've had people enter our Quantzilla chat and say, oh man, we just had these issues on Solana and blah, blah, blah. And it's kind of crazy to see it in real life there. It does suck as well, it's a kind of a predatory thing that's going on. At the same time, the liquidity has to come from somewhere. So you always got to realize if you're winning, someone else is losing. A little bit of XRP news today. Here's when XRP could reach $15, according to this analyst. Now, I know this is a bit of speculation, so I don't really like to get too much into that. But at the same time, it's always good information just to kind of keep in the back of your mind here. XRP spent most of 2024 trading sideways. However, it was one of the biggest beneficiaries of the bull run that kicked off in November. At first, 2025 seemed to be off to a good start for the token. However, momentum has shifted as of late. Since the beginning of the year, XRP has seen prices rise by about almost 18%. Despite these recent struggles, analysts are generally confident that the digital asset still has some room to grow. Ripple's long-standing lawsuit with the SEC could be nearing a conclusion, as shakeups at the regulatory body will likely lead to a more favorable stance toward crypto. One technical analyst recently outlined a case as to how XRP can make an upward move to $15. So, since the analyst identified the triangle on a long-term chart where the pattern seemingly began forming during XRP's 2018 peak, he expects that the resulting move will be quite substantial. To be more precise, with the chart in question, the price target works out to approximately $15, a figure that would entail a massive 512% increase. If met, this mark would also represent a level 370% higher than the digital asset's all-time high reached on January 18th. Exciting times, and of course, XRP is still strong in my opinion. There's a lot of FUD going around. I've seen some FUD on Twitter earlier, and I think it's just kind of hilarious. I'm not, only about one coin. I'm invested a little bit diversified, but I'm definitely an XRP maxi. I see the future. I see where things are going, and a lot of the research is all pointing to the same thing. Ripple's had payment rails installed in countries around the world for 10 plus years already. And, the writing's on the wall, folks. It's just a matter of time. Now, something we're going to talk about that may interest a lot of you because there hasn't been a lot of news about it. We're going to talk about PiCoin, and this is actually going to lead into, I have a video in the works that I'd like to get out sooner than later, but got a lot on my plate at the moment, but it's all right. It's still in the works, like I said, and it's quite interesting. I am quite convinced Pi is a scam, but let's see here what the news has to say about it today. So the Pi network IOU price is surging 78% ahead of open network launch. So between February 9th and 12th, it surged 78% as anticipation for the launch grows, which is supposed to happen on February 20th. I wouldn't be surprised if we see yet another pushback on that date, though. However, it's important to note that this is not a real price, but an IOU price because Pi is not currently tradable. So this refers to the price of a token that represents an IOU contract commonly used for assets that are not tradable on exchanges yet. Similar kind of to futures. We'll talk a little bit more about that here in a moment. So how can you sell your PiCoin before it hits exchanges? Well, here's how you can cash out now. It's not completely honest, but there are a couple things that you can do. I'm going to tell you why I don't know that it's the best idea to do so, though. So the Pi network has been in a testnet phase since 2019, which is almost 6 years. However, this month, it's going to launch its mainnet, apparently on February 20th. The next obvious step for Pi would be to take its token and list it on various centralized and decentralized exchanges. Expecting a sell-off after its launch, several users want to redeem their sales before the crypto gets listed on various larger exchanges. So we have brought you two unique methods to sell your Pi coins, one before the mainnet launch and another after the launch but before exchange listings. So an IOU, as mentioned in the last article, is used to refer to a customized derivative contract, essentially, where two individuals, a buyer and a seller, use a decentralized smart contract to transfer crypto to each other at a later date at a predetermined price. It's similar in function to a derivatives or a future trading contract. So some customized IOU platforms include USGrow and MacTiz, names given for demonstration only, not a piece of trading advice. Such platforms do the entire contract without transferring any actual crypto between the buyer and seller, i.e. the same way a derivative contract works. So let's understand this via a quick example using PiCoin. So say Elon has one PiCoin on the Pi app and wishes to sell at $85 because he thinks it will crash, and Trump wants to buy that PiCoin for $85 because he thinks the price will rise. Well, in the usual case, the smart contract will hold the PiCoin and the stablecoin to transfer Pi to Trump and the stables to Elon. However, Pi is not yet launched, which means that no transfer can take place at least until the mainnet is open for business. Both of them will pay $20 as collateral. 5 days before the mainnet launch, Elon sees the value of PiCoin to rise to 86, so he has to pay Trump $1 for that increase. Note, Elon has sold the rights of the PiCoin to Trump on the 13th. Similarly, if the value of PiCoin drops to $84, Trump has to pay an extra $1 to Elon. If both of them agree, though, they can cancel the trade at any point before the launch or, before the contract expiry date. Peer-to-peer sales will only be unlocked after the mainnet launch on the 20th of February, but will be available for peer-to-peer transfers before the token listing. Usually, there's a few days gap between the two. And as we'll talk about in one of the next articles coming here related to this, you won't actually be able to withdraw the PiCoin for like a whole day after it launches. So keep that in mind. Now, some Reddit information here. It's always good to see what people are saying. Well, PiCoin mainnet, another scam? And yes, I do believe it's a scam. Recently, there's been official news from the creators that Pi will be available for trading from the 20th of February, which is the official date of mainnet. Its value is currently listed at $60 on every platform. Everyone is so desperate and saying they're going to be very rich now, but what they don't realize is that it won't ever likely come to fruition. So this person's asking, what are your opinions? Is it that easy to get rich all of a sudden out of nowhere just by clicking some buttons in the app? This all seems like a scam to me, he says, but probably because I'm not too hopeful about these gimmicks. Also, most of the people in the community or the internet who support Pi seem like bots, and that's definitely a big point that needs to be looked at before you want to give away all your KYC stuff to these guys. One of the commenters here says this: the value will plummet as soon as the average Joe will be able to sell. The very first Joes will make some good money out of their mined Pi coins. The rest will be left with cents and all that for having their app tracking you all this time. Another one says, yes, scam. But the question is, what are they scamming people for? They have not asked for any money. Is it the data that they're going to sell? This person says, if yes, then isn't that what every social media platform like Facebook, Instagram, etc. is already doing? And I mean, yes, they kind of have a point. At the same time, though, when you start looking at the wider market of Pi, which is kind of what I'm going to touch on when I do a video here before mainnet launch, there's not one big YouTuber that's talking about it, whether good or bad, really. The only YouTubers that I've been able to find that aren't just random shitty AI generated accounts with just a lot of words and no real information other than obviously promoting their own coins. Some of them even have tens of thousands of subscribers, but they're all like essentially just pushing Pi. Are people from Africa that I've seen so far. And Buddy seems to explain things pretty well, but I'm not sure if he's understanding the bigger picture. If you look in the comments of all these videos, whether they're the videos of the people actually explaining stuff or the shitty AI bot accounts, essentially, most of the people in the comments are from poorer countries and kind of appearing to expect this to kind of just moon as soon as it goes out, which is going to obviously benefit them huge, but maybe not realizing the larger scale of if everybody sells. And I mean, I know there's people involved. I have several friends who are also involved with this. I've been mining Pi for a while. Personally, I'm not giving them any KYC, but as soon as people around the world are able to access the trading for Pi who have done the KYC, I also believe it's going to dump. But in my opinion, overall, it's a data harvesting scam and really not much more. The thing about the whole you better hurry up and get your KYC in, before mainnet launch is just causing FOMO for people, and it's making people, rather than thinking and verifying, just trusting that, oh, everything's great. Look at all the people here. There's 10 million pioneers or what have you, and I think that's really going to kind of just be like a FOMO thing to trick people, because once you jump in and give them your information, that information could be sold to the highest bidder, and I mean, you never know what's going to happen. To be fair, though, information gets hacked all the time from health systems, from financial systems, from businesses, and that information also gets sold. So you're not really safe anywhere necessarily. But I'm definitely not going to be giving any information to Pi. Now, some more Pi information, because it's a big chunk of today's episode here. What is happening with the Pi network? HTX delists Pi and halt Pi USDT trading. Now, of course, that's talking about the IOU contract. But HTX has delisted Pi, halts trading, and converts its holdings to USDT. It may relist after Pi's network mainnet launch. OKX and BitGet to list Pi for spot trading post-mainnet, while IOU trading sees Pi surge to $86 before dropping to $61, which is still up 53% in a week. Critics question Pi network's legitimacy, citing delays, roadmap changes, and concerns over its mining model and referral-based growth structure. I don't think there's too much to talk about here. Oh, there's a little bit more here. So, is Pi a scam? Again, yes, I wholeheartedly believe it is a scam. Crypto enthusiasts on social media have been debating on the likelihood that Pi is a scam token in the making, in part because of the numerous revisions made on its roadmap. The platform introduced a revised mining rewards model in 2022, implementing an exponential decline formula aimed at balancing network growth, accessibility, longevity, and token scarcity. Pi Network enacted a grace period on July 1st of 2024, which limited unverified Pi from migrating beyond a rolling 6-month KYC window. This measure was designed to encourage faster KYC participation. As I said, FOMO, hurry, give us your information or you're not getting anything, while ensuring only verified pioneers could move their assets to the mainnet. Several successive extensions have seen the grace period now pushed to February 28th, a week after the open mainnet will supposedly launch. And side note, in my Pi app, when I open it, it says that the verification window has been pushed to like June or July. So I'm not really sure why I'm seeing different information here. Again, further adding to the suspicious nature of this whole ecosystem. Further concerns have emerged regarding KYC verification. This is rampant among Chinese traders, according to several reports. Many users in China have encountered limited verification slots or systemic difficulties when attempting to complete the KYC process. It's not only in China either. I've seen a whole bunch of reports of people saying, yeah, I did the migration, it's not working, I'm stuck. Some people have been stuck for months, up to a year, doing this. Again, another further point of suspicious activity regarding this chain. So I believe we have two more Pi network related bits of news here today. So PiCoin listing update. Bybit denies the listing. Will Binance follow suit? Millions of KYC verified users, the Pi network aims to create a thriving digital economy. The launch, referred to as the open network period of mainnet, is expected to integrate PiCoin with external systems for real-world applications. The announcement of PiCoin listing on OKX, MEXC, and BitGet has generated substantial interest among traders and investors. So here's some details. OKX, MEXC, and BitGet will officially list PiCoin on February 20th at 8 UTC. Oh, thank you, Evan. Shout out. Appreciate that. PiCoin spot trading pair, Pi US dollar, or USDT, I should say, is going to be the pair. Withdrawal availability, February 21st, 2025 at 9 o'clock UTC, and that's going to be on BitGet. So it's a whole day and an hour later that you're going to be able to withdraw. PiCoin will be listed in the Innovation, Web3, and Public Chain Zone on BitGet. Deposit availability is yet to be announced. Now, the Binance listing possibility. If PiCoin is listed on Binance, analysts predict its value could surge between $500 and $1,000 due to Binance market dominance. I think that is an outrageous estimation personally. Binance is the largest crypto exchange, and a PiCoin listing would provide massive liquidity boost and increased adoption. Or would it though? Bybit CEO Ben Zhao recently ruled out PiCoin listing on Bybit, calling the idea ridiculous. The decision may impact Pi Crypto's value, potentially limiting its initial growth. Analysts predict that in case Binance lists the coin and Bybit doesn't, the Picoin price would range between $300 and $500. However, if both exchanges deny the Picoin listing, the Picoin price may range between $20 to $5, which is a 3 or more fold decline from its current IOU price, which is kind of wild. But like I said, I wouldn't give any of your information to these guys at all, folks. Now, final Pi news today. Picoin price at risk, 5 reasons it may drop after the mainnet goes live. Now, this is a bit of a more reasonable, I would say, estimation as to kind of what's going to go on here when it launches. Millions have been mining Pi for years, hoping for a major payday once the mainnet launches. But what happens next? Well, there are growing concerns that Pi's price could take a big hit after its long-awaited launch. From delayed timelines to potential sell-offs, several factors could push the price down instead of up. Delays in mainnet launch are hurting investor confidence. I mean, obviously, when you push something back and back and back and back, 6 years now, people are going to get a little pissed off, you know. The mainnet launch and KYC process were expected to happen by 2024, but again, it's been pushed. So these delays have frustrated investors and caused the price to drop by about 50% since November. But again, there is no actual price for Pi. It's an IOU. And also there's a Pi Futures app, which I believe is also a data harvesting scam that may not even be related to the original Pi coin, because the Pi Futures isn't really a thing either. If nothing's available for trading, where are these people trading this stuff? You know what I mean? Okay, great, an IOU, but that's just suspicious in itself if you ask me. Early miners could sell for profits. I mean, they're going to. People have been waiting forever. And if you go look up Picoin scam on YouTube, you're going to see a ton of people putting out those AI-generated videos, like I said. But forget what the videos are saying. Just read the comments. People are going to dunk hard. Since they missed the 2021 crypto bull run, and I think they're referring to Pi here rather than users, and face multiple delays, some may decide to sell their coins as soon as trading begins. If too many Pi coins hit the market and demand isn't high enough, the price could, and I'm assuming will, drop significantly. Airdrop-based tokens often drop after launch as it is. So recent examples include the Barra chain, which dropped 50 to 60% after its airdrop. There's a few more examples here as well. Now, market timing could also work against Pi. Timing is crucial in crypto, as I'm sure most of you know, and Pi's launch may not be happening at the best time. Historically, the first quarter of the year hasn't been great for many cryptos, and third quarter is often a slow period. So if Pi's mainnet if Pi's mainnet does go live during a weak market phase, its price could struggle to gain momentum. Technical indicators also suggest a bearish trend. So Pi's price chart shows signs of weakness. The token has already fallen below key support levels at $50 and $55, both of which previously held strong. Don't put all your eggs in one basket. I mean, if you already have done your KYC verification, you don't really have anything more to lose other than to try to get out what you can out of it. But what I'm seeing here is it seems too good to be true. You know, you're not going to get a bunch of coins or a bunch of value out of nothing. And the whole system doesn't make a whole lot of sense. And when key parts don't make a whole lot of sense, there's probably something in the bigger picture that you should be aware of. A few more stories to talk about here today. Well, I guess we got one more Pi news, but this isn't really a whole lot. 3 more reasons why the Pi network price may crash after the mainnet. And this just kind of builds a little bit on what we talked about on the last article there. The price may drop because of revenge selling. So the first reason why it may crash is revenge selling. And this is a situation where pioneers who have been mining the token for years decide to sell all their tokens. And I think that's probably the most realistic thing that's going to happen. Tap to earn tokens also crash, as mentioned in the last one there. So another one that is Hamster Combat, it crashed by 90% from its highest level in September last year because it was a similar type of tap to earn. And seasonality is also going to play a factor, as you can see here. I'm sure you all have seen this chart in other videos, other people talking about it. That's due to the whole part of the cycle that we're in. We still are in a bull market, but like they said, Q1 might not be the best time to be doing this. That being said, though, it wouldn't surprise me if Pi were to, push the launch date further back yet, because that seems to be their MO. Moving on here. Wow, okay, so this one is pretty interesting here because a lot of times you hear, young people aren't really planning for retirement. Young people don't understand this and that. I mean, the reality is it's getting harder and harder for young people to get ahead, to own a home. It's nothing like our parents' or our grandparents' generation was. This article does spark a bit of hope in me, at least. So younger generations turn to crypto for retirement savings. Well, BitGet research reveals a major shift in retirement planning among younger generations. Gen Z and Gen Alpha are showing a growing distrust for traditional pension systems and a strong preference for alternative investments, particularly cryptos. 78% of respondents prefer alternative savings over traditional pension funds, and 20% are open to receiving pensions in crypto, showing a growing interest in digital assets as part of their retirement strategy. Over 40% already invest in cryptos, demonstrating high engagement with the crypto market. 73% do not understand how traditional pension funds work, indicating a gap in financial education. And 87% are considering cryptos for long-term savings, with 41% actively exploring this option. Now, I think this gap in financial education is a solid part of it. Also, transparency as to how all this stuff works and to where the funds are going. I think that plays another key factor in all this. 78% of respondents stated they would rather rely on alternative retirement savings such as crypto, real estate, or private pensions. A key issue is the lack of understanding of how pension funds operate, and over 70% admitted they do not know where or how their pension money is invested. This financial uncertainty is leading many to seek out self-managed investment options that offer more control and transparency. However, challenges still remain. The biggest barriers to widespread adoption of crypto pensions are market volatility, of course. With the price fluctuations, it makes them riskier than traditional investments. Until you start to understand the market, then you can kind of time your buys and sells, right? Also, regulatory uncertainty. Now, this has been beaten to death, but the uncertainty in the regulation of all this is going to change. It is already changing. And I mean, the Ripple lawsuit, which is a main part of all this stuff, it's been a sham, a scam since day one, whatever you want to call it. But it's not a real actual lawsuit that's happening. Gary Gensler has been in on this since day one. He taught crypto apparently at MIT. I mean, it's just kind of crazy, the manipulation that's going on. Younger generations are already planning for retirement, though. So contrary to the stereotype that young people don't really think about retirement, a study found that 76% of respondents are already considering their retirement savings. Of these, 33% have active plans, while 43% are still evaluating their options. This proactive approach suggests that younger generations are not only interested in new financial tech, but also they recognize the importance of preparing for the future. If you're in this for the short-term gains, then I mean, maybe meme coins are your thing, but your chances of losing everything are a lot higher than taking the perspective of, this is a longer-term investment. This is kind of something you don't need to worry about necessarily. Dollar cost averaging is a good strategy that many agree and many swear by. If you just start, doing small buys that don't really affect your overall income, eventually that's going to snowball into something else. You don't even have to look at your wallets. Just do that buy all the time. You could set it up on most exchanges to do automatically. And then one day you're going to check and it's like, holy crap. And then if you're in a downturn, okay, great. You still have more money than you probably realize. But if you're in an uptrend and things are going wild, you may be pleasantly surprised as to what your future holds. Final article here today. And if you don't know, Quantzilla, we like to take our jabs at Solana and Ethereum. So this is kind of a bit in jest. At the same time, it's actually bullish for Solana, believe it or not. So over 287 million in Solana have been removed from circulation via Pump.Fund's graduated token mechanisms. More than 74.6%, so basically almost 3/4 of the liquidity pools that have been moved to Radium are inactive, with more than 1.38 million Solana locked up in them. In the world of crypto, the mechanisms controlling supply and demand play a crucial role in shaping a token's value. One such mechanism gaining attention is how Pump.Fund handles token launches and liquidity pools, which indirectly affects the circulating supply of Solana. Pump.Fund co-founder shared on X that the token graduation mechanism combined with LP burning is effectively reducing the circulating supply of SOL. So what does burning mean here? Well, liquidity pool burning is when a token graduates from Pump.Fund, its initial liquidity on Radium is burned. This means that the LP tokens are sent to an inaccessible address, permanently locking liquidity in the trading pool. Solana's role. Well, a minimum price is set for the token, locking a specific amount of Solana in the pool. This SOL is essential for trading, but cannot be withdrawn, effectively removing it from Solana's active supply. So inactive pool, well, many liquidity pools lose activity over time and become inactive. While some Solana is still in these pools, it cannot be withdrawn, effectively taking it out of the active supply. That's bullish, folks, as much as I don't like to admit it. But again, I'm not trying to be like, one coin only. Yeah, I'm an XRP maxi, but there is value in a lot of other stuff in the markets, right? Over 93,500 tokens have graduated from Pump.Fun and successfully transferred their liquidity to Radium. Last month set a new record with more than 24,000 tokens completing the process, the highest number to date. And if you're not familiar, there is literally millions of tokens being pumped out from Pump.Fun. The numbers are absolutely staggering, folks. I talked about that a couple episodes back in one of these news segments. It blew my mind. I didn't realize that there was that many new tokens pumping on the market all the time. And it is arguably diluting the overall value of the crypto market, as some of the more well-known altcoins aren't really getting the liquidity that people have expected necessarily, because a lot of liquidity is going into these millions of different tokens, and some of them are happening so quick it's up and down within an hour sometimes. A lot of people are getting rugged, and there's just a lot of money being lost. While Pump.Fun has launched far more tokens overall, only those that reach a 79 SOL market cap through the bonding curve mechanism qualify for graduation. Once a token graduates, $17,000 worth of liquidity is added to the Radium pool and then burned. Currently, over 2.87 million SOL are locked in these LPs. This mechanism helps protect against rug pulls, ensuring that liquidity isn't suddenly withdrawn, leaving traders with unsellable tokens. And if you've had any time in the trenches at all, I'm sure you've been involved with something where you just can't pull it out no more. Things happen fast, and maybe you went for a coffee break, maybe you got busy on a call, or maybe you went to sleep and woke up and just the reality of it. 62,000 pools hold between 15 and 20 Solana each. Over 16,000 pools hold between 20 and 25 Solana, and over 84% of the pools contain less than 25 Solana. So that just gives you a bit of a perspective on, how big these pools are and where really the money's sitting. As a result, over 1.38 million SOL, worth more than $287 million is now locked in inactive pools. Kind of crazy. Again, not all bad. Before we finish off here today, I just want to remind you all, you got to check out Quantzilla. Go over to Dex Screener. Qzilla is our ticker. Hit the rocket. Show us some support. Make sure you head to www.quantzilla.online. That'll give you all our links to our documentation, our Telegram, which is super important. You're going to want to join that. You're also definitely going to want to check out Quantzilla Coin on X. You're definitely going to want to also pay attention to what we got going on later. What time is it here now? So in about an hour and a half, we're going to be doing our first X Spaces, which is going to be awesome. It's going to be myself, and it's going to be our main lead dev, Greenspade. He's going to be there to answer questions. We're going to shoot the shit a little bit. We're going to talk a little bit about some of the stuff I touched on today. Maybe, dig into a little bit of the $5 wrench stack, because that's some important stuff to pay attention to. We're also going to open the floor to some of our community members. So if you're in there, you can get a chance to speak. You can get a chance to, get to know us on a personal level, and we can get to know you on a bit of a personal level. We can talk about our experiences in the market. We talk a little bit directly about, Quantzilla. We had 88,000% gains on our first parabolic run, which is super exciting. We're implementing new features all the time. We have tokenized real-world assets. So currently we have gold and silver. We're working on the gold, and we're working on the copper that's going to be coming out with some custom molds. So that's super exciting stuff. But you can trade those for tax-free, because you just trade the NFT. Also, it doesn't require you to be holding any of the physical tokens, or I should say coins. But in the case that you do want to burn your NFT, you can absolutely go ahead and do that, and then you will receive the actual gold, silver, or copper. All you have to do is pay the shipping, which is pretty reasonable, and insurance, of course. We also are now available on PancakeSwap. We are tied to BNB. We are wrapped there. We are also wrapped on Polygon. Super exciting stuff there. We're not quite working properly yet on Uniswap, but you can view us on Uniswap if you use our coin address. Now, again, you're going to want to make sure that you go to our Telegram, because we do have the actual coin addresses, and there have been people impersonating us. So make sure that you